And I fear that this is going to be a real crazy year. It's an election year again here in the U.S. You got the Fed not knowing, you really don't know what they're going to do. You got geopolitics, where all of a sudden there's all these hot spots flaring up around the world. There's all kinds of crazy things are going to happen this year, which make it challenging. But I call it a macro cast because at this point, if you can just get some of the macroeconomic things right, what's going on with inflation, what's going on with the economy, what's the Fed going to do, then you're 70% of the way of getting it right on prices too. So we took a stab at it, and I think it aligns a little bit with where we were a couple of years ago. So I end up being kind of optimistic. But again, this is going to be some kind of year, Elijah. So we'll see how it all plays out.
Do you have any price targets for both gold and silver this year?
Yeah, I do. That's all part of the fun. Some folks look at me and think that's like, you got to aim higher. Okay. And I've never have, just because I don't think there's any value to, claiming we're going to $10,000 or something like that. I think that scares people away more than anything else. So, over the last 15 years since the great financial crisis, go back to 2007, dollar price gold has averaged about 11%. Okay, that's at least a good place to start. We finished the year right around 1800, so 11% would get you up just somewhere north of 2000 for the end of the year, or a high watermark, something like that. That seems, at least plausible. Silver usually does, about twice as well or twice as poorly as gold, so you can kind of do that math as well. And I think, again, if we can get the macro stuff right, and the signs are there that this year is a lot like 2010 or even 2019. And those were both really good years for the precious metals because they were both years where the investment world kind of figured out that the Fed was full of it. And I think that's the revelation that will be had over the course of this year again. I might expand on that further, I guess, Elijah. In the great financial crisis, we got QE for the first time in March of 2009. And we were assured by the Ben Bernanke, as we used to call him, that it was a one-time deal, right? It was just in response to the financial crisis. And eventually the Fed would draw its balance sheet back down to $1 trillion, and then rates would go normalize and all that kind of stuff. And in 2010, as the year began, the markets kind of believed him. Problem was, by November of 2010, we got QE2. And that was when, silver moved up 150%. Gold over time moved up nearly 100% and hit what had then been an all-time high north of 1900. And, again, there was this glimpse behind the curtain that, hey, wait a second, the Fed just kind of tugging our chain here. Nothing, they're not going back. Okay, so then fast forward to 2018 into 19, we'd had 5 years of the Fed telling us that rates are going to go up and they were going to normalize the balance sheet and all that kind of stuff. And then the markets broke. And the stock market crashed about 20% in 20 days in December of 18. And so the Fed changed policy again. They started cutting rates by June of 19, where as 19 began, Goldman Sachs and JP Morgan said they were going to be hiking rates 4 times. Does that sound familiar, by the way? So anyway, again, it gets revealed that the Fed, they're now going back to, trimming the balance sheet in half and all that kind of stuff. Not happening. So if we're in this period again, Elijah, where people are realizing that the Fed is full of it, then we're probably on the cusp of another pretty significant move. Again, it was big move in 2010-11, another really big move out of 18 into the middle part of 2020. Yeah, we conceivably could be on the doorstep of that again. Inflation, the numbers go up, but they don't then go back down. It's not like, say you had something that cost you $5 a year ago, and it went up 20% in price this year. It's now all of a sudden it's $6. Well, if now in 2022 it's only going to go up 10% in price, that's still $6.60 versus $5.50. It's not like you reset down to $5 and then add 10% again. So this is a legitimate, serious problem, especially on that for real wages, for the the great, 90% of the people in the U.S. that live and work and pay their bills and try to, raise their families and all that kind of stuff. So it is a problem. It's going to stay a problem. I saw some stuff, as we record this here on the 13th, the producer price index came out. And month over month, it was only 0.2%, down from 0.7 or 8. And I saw people go, hey, isn't that great? See, it's already working. The Fed just has to talk about it. It was 0.2% because energy prices fell in December. Barrel of crude oil went from 85 to 65. A lot of that crash went down $10 on Black Friday, right? Last Friday of November after Thanksgiving. So energy prices, as they factored into the PPI, were sharply lower from November and December. But I don't know if people have noticed, but we're right back to 82 in crude. So that factor being, that's only going to go back up when we get, the next CPI and PPI next month. And again, that's all about this getting entrenched, part of the equation going forward. So I don't know. The Fed certainly can't afford higher interest rates. No one can. The government can't. The consumer can't. The states can't. The cities can't. Pension funds that are loaded with bonds and insurance companies are loaded with bonds. Higher interest rates mean they'd have to mark their portfolios to market with falling bond prices. Nobody can afford it. And so we run the real risk of, as we go through the year, higher short-term rates, but falling long-term rates, inverting the yield curve and driving ourselves, if we're not already heading that way, toward recession. And then you're talking stagflation like we had back in the 70s. And man, that's not something that nobody wants to go there. So there's a lot in play. No doubt about that, my friend. That's all part of why, like I said, I'll make my predictions because that's what I do. But this is a toughie. This is going to be some kind of crazy year. We always get focused on price. Everybody does. You're kind of conditioned that way, whether it's stocks or your house or, a tool you have or anything. We talk about the price all the time, but value. Yeah, because you might see, on a bad day, the price of gold go down $25. But as the plates just continue to spin faster and faster and everything's just going, closer and closer to the mathematical end, the value of the precious metal doesn't really matter on a day-to-day basis. It's always going up, for what you want it to do as a part of a, total portfolio, it's irreplaceable. And so, that's like what we try to do at my side. It's not so much about trading and, catching a swing and a pivot and all that kind of jazz. It's more about getting the general trend. And, if you like to buy even 20 ounces of silver every month, well, if we get the trend right and you hold off and you can save you $1, it saves you $20, more than pays for your subscription. The main thing is just the recognition of where we are, how fast we're getting there, and then taking preparatory steps, ahead of these events that are definitely coming, just a matter of when they get here. If there are people that are out there, and there are a lot of them, that are frustrated with price and the pricing scheme and how can trading of a futures contract be the determinant thing for price? It doesn't make any sense. Ever since Nixon suspended the convertibility of the dollar into gold because there wasn't enough gold to go around, the financial system has developed, all sorts of gold substitutes, synthetic gold, pretend gold, whatever you want to call it, whether it's futures contracts or ETFs, unallocated accounts, where they claim they have the metal, but they don't charge you a storage fee. But on where they do have metal, they do charge you a storage fee. I'm always amazed at how that works out. But anyway, if you're frustrated by price and you'd like to see, what actually happens in a physical market, the best thing you can do is own physical metal. Don't own the different things that are just simply an exposure to price. Buy the real thing. Every hand that we take out of the financial system, the bank, driven system, and get it in your own hands or, whatever, trusted storage company, that kind of speeds along the process, getting closer to a true price discovery of, based on how many dollars is it going to take for me to get my hands on that ounce, as opposed to, well, I can buy this ETF or I can, buy a futures contract or whatever. So, yeah, there's definitely still a time and a place, and this is the time and this is the place to have physical metal. And it's not ever anything, nobody should ever sink everything into one asset class. That'd be foolish, right? You wouldn't put it all in Tesla, right? You might have some allocation to Tesla just to kind of for the whole blended portfolio. But boy, you look around at a year like this, like I said, you've got a risk of who knows what the monetary policy is going to be. We got political risk, ahead of that next U.S. election. I mean, think back what it was like in the summer of 2020. I mean, what's going to be like in the summer of 2022? We'll see. And then you got geopolitics, whether it's China and Taiwan or Russia and NATO or Iran and Saudi Arabia. I mean, all of it just, if you have some gold and silver where the value is always there, it makes you sleep a little better at night.
You mentioned really a way that people can vote with their wallet, right? For this, getting money outside of the system. We saw a lot of people doing that last year, especially at the beginning of the year with the silver squeeze. Do you see that happening again, where really retail investors have some impact on the price of silver?
I mean, I was right there last year when that idea first took hold on that last Friday of January, and that was fun. And that group over there, that Wall Street Silver group, it's only growing. I mean, it's just getting to be more and more people. So we'll see. There's kind of that awakening. You got to reach a point of critical mass where enough people demand physical metal, right? More than the system can provide. I'm not sure if we're there yet, but just even on an individual basis, Elijah, if someone were to skim around, on Google or DuckDuckGo or whatever, and just start typing in, central banks buying gold, and just even as of late, the central banks continue to buy gold, not just like Russia and China, but I don't know, what was the most recent, Ireland? Okay, and the central banks realize that again they're just diversifying as well. I mean, they're taking their dollar reserves and taking some of those dollars and exchanging it for hard asset, gold. Well, okay, how'd they get dollar reserves? Well, from, build-up of trade, foreign currency reserves and stuff. Well, you and I have dollar reserves, Elijah. I mean, it's called a bank account. It's your savings account. It's your account at Ameritrade or Schwab or something. Those are your dollar reserves. You went out and worked. You spent some of what you made. You paid taxes. Whatever's left over is your savings. Those are your dollar reserves. Well, if these central banks, in preparation of, where this is ultimately headed, if they want to diversify some out of dollars into gold, well, geez, Louise, why wouldn't we as individuals do the same? So we'll just keep trying to put that message out there, grow the amount of people that are seeking physical metal. And then, if in the off chance we can demand enough that it stresses the system and, again, pulls back that curtain so that people realize that there's far more pretend metal than there is the actual thing, that could be a real fun event to be a part of as well.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70 in the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.